When I was first exposed to Bitcoin, I thought it was a fraud and a Ponzi scheme. I said, this just doesn't make any sense. A bunch of guys that are mining this kind of magic internet money, and we're going to say now it has a value. It just seemed ridiculous to me. And then I saw Bitcoin crash, right? Bitcoin went from I saw it go from $7 to $1,200 and then crashed to 200. And I thought, okay, well, that's the end of Bitcoin then. And then something really interesting happened. You see, when something's fraudulent or it's a bubble, when it crashes, it goes to zero, right?
Bernie Madoff
went to zero. Bernie Madoff went to zero. Enron went to zero. It doesn't have any value. And then I looked at Bitcoin, and it was still worth about $3 billion. And I said, okay, I'm missing something here. So then I heard a speech given in January of 2016, and I finally understood the power of Bitcoin and the blockchain. I realized this was a way that people who didn't know each other, like each other, or trust each other could transact in a trustless way, and that we could own value that nobody else had any claim over, which is not the way the world works right now. It doesn't matter how wealthy you are, if you own real estate, stocks, bonds, or gold, if the government wants to take your money, there's really nothing you can do about it. The beauty about cryptocurrency is if you keep your private key, your password safe, and don't blab it to the world that what you own, no one can take that from you.
Right.
And that's never happened before. The huge transfer of wealth that's happening right now. The last time I saw something like this was back during 1994 to 1995. In the early to mid-90s, individuals were making just enormous amounts of money buying companies like Dell, AOL, Microsoft, Netscape, and some of these smaller internet stocks. And the institutions had completely missed that bull market. And so they were scoffing at these so-called lemmings. And so during 1994 to 1995, we had a bit of a bear market. And so, again, institutions were out saying that, oh, anybody buying internet stocks, you're idiotic. And so you had a lot of people selling their AOL, selling their Microsoft, selling their Dell shares. Guess who was buying? It was the institutions. If you look at a chart of institutional allocation to venture capital internet deals, it doubled between 1994 to 1995, which was exactly when institutions were saying, oh, this is just a market for idiots. Nobody should be buying this stuff. So they literally stole all this wealth that should have been in the hands of individuals that owned Dell, Microsoft, and AOL. And then from 1995 to 2000, of course, we saw $5 trillion come into the market, and the biggest bull market we've ever seen. So this blueprint of creating fear in order to get cheap prices is nothing new. So
and hang on just a second before you go on.
Yeah.
This one is really important to me because the housing crisis, those banks, they bought up all of those houses. They were the ones who caused the problem.
Right.
Then they were talking everything down and saying, I'm just taking the junk off the table.
Yeah.
That's not junk now.
It's not junk. When it's dropped 40 to 60%, it's not junk. So this happened between 2011, 2012. Blackstone Group buys 50,000 homes. But during this period of time, the regular individual couldn't get a mortgage, right? It was virtually impossible to get a mortgage during this time, exactly when institutions were buying. And then the dot-com crash in 2003. If you can go back and look at old CNBC clips during 2003, even as the market was starting to come up, oh, don't buy tech stocks. No, they're evil. Don't buy tech stocks. Don't buy tech stocks. But institutions, if you looked at the 10Ks, the Qs, and all of the filings, the quarterly filings, they were all loading up on tech.
This is how the rich get richer.
Yes.
They know, they're connected. A lot of times they're coordinating without the insider trading. This is not illegal to do.
No, manipulating the news cycle, if you're smart about it, is they can get away with it. Nobody's ever been arrested for anything like this.
So now, with crypto, I know personally, people that would have gotten in or stayed in if these people weren't saying what they're saying.
Right, and so this has really been extremely egregious. So on September 12th, Jamie Dimon says Bitcoin is a fraud. He says he'll fire any one of his traders buying Bitcoin. Bitcoin drops 24%. When Jamie Dimon speaks,
People listen.
People listen. So that weekend, we found out that the largest buyer of a Bitcoin fund that's in Europe that buys physical Bitcoin, right? The largest buyer was Morgan Stanley and JP Morgan. And that's not illegal.
He says it's a fraud.
It says he'll fire anyone that buys it. Yes.
And at the same time, his company is buying it.
His company is buying it.
It's just, I mean, so unethical.
Right.
Okay, George Soros.
George Soros, in January 24th, price was already down, calls Bitcoin a bubble, says Bitcoin is the worst, the worst investment in the world. Don't buy Bitcoin. Don't buy Bitcoin. Basically throws gasoline on the fire at this point. And then what do we find out? So he says bubble here.
It drops 44%.
Right. And then here in April, 2 months later, guess what we find out?
Yeah.
His $26 billion family office has approval to buy cryptocurrency.
Right. And we only knew about it publicly here. And this is the kind of thing that George Soros is famous for this, talking the sterling down.
Yeah.
And what did he do? He stole the pensions of all the little people.
Yeah, made $1 billion.
Yeah. Okay.
So then here now, Goldman Sachs, this, again, February 7th, most cryptocurrencies will crash to zero. Now, I remember when they said this in February, and I had, through my network, I knew that Goldman Sachs was setting up a crypto trading desk. Absolutely knew they were setting up a crypto trading desk. And
I remember you telling me that.
Right. And then, of course, they were denying it. No, we're not. No, we're not. No, we're not. Yep. Price falls down 27%. And then what do we find out? We find out here, they say BTC 0. And then we find out just before May, new trading desk. Not only that, they put $400 million to buy a cryptocurrency trading platform. Okay, so February 7th, it's all going to zero. May, we just spent $400 million just on a flyer.
And they're not the only ones.
No. So you have a lot of institutions that are coming. You had Christine Lagarde from the IMF come out. And this was, what's funny about this, Glenn, is it was all around the same time. It was almost like I can't prove collusion, but, it walks like a duck, it quacks like a duck.
And you know what?
It's probably a duck.
The people, they all hang out together, they all think alike. It doesn't have to be calling each other.
Yeah.
They know this game.
Yes. So IMF, Christine Lagarde says in the first part of the year, says all central banks should band together against cryptocurrency. Right. Have you ever heard her say all banks should band together against illegal arms?
No.
Or illegal drugs?
No.
Or human trafficking?
No.
No. But this nascent asset class, we must all join arms against.
What this did was play into people's heads that these guys are never going to let Bitcoin survive.
Right.
And so people thought, this is over.
Selling. Yeah.
So let me show you, can we show a chart of the 5 crashes? This is from, I think...
Last year, right?
Last year, okay? Do we have that chart of the 5 crashes of Bitcoin?
Right. It was 30%. Right. I think 4 of them were 30% and 1 was 40%.
And this is, here it is. Explain this chart. Those are Amazon crashes.
So these are Amazon.
Do you have Bitcoin?
Yeah, we need the Bitcoin chart.
We are
all right,
so good.
They'll come up later. Okay. Yeah. So what I want to talk about now is one of the key lessons I learned from being involved in the market so long is rather than listening to what people are saying, look at what they are doing.
Correct.
So this is what we should look at, and this is what I want people to focus on now. Billionaire hedge fund manager Stephen Cohen, who's worth between $12 to $14 billion, by far the smartest hedge fund manager in the world, I would say of the last century, is buying Bitcoin. $6,800, buying Bitcoin. Mark Lazary, Avenue Capital Group, worth about $1.7 billion, has put 1% of his net worth into Bitcoin at around this price, $7,500. Andreessen Horowitz.
Mark Andreessen.
That's right, Mark Andreessen. An early investor in Airbnb, Skype, Facebook, just launched and Coinbase just launched a $300 million fund. Wellington Capital, they have $1 trillion in assets, are starting to get involved in Bitcoin futures. Susquehanna, the 12th largest trading firm by volume. They now have their own Bitcoin custody department, their own trading department, and they're trading Bitcoin and Ethereum. Goldman Sachs, this new CEO, David Solomon, the most pro-Bitcoin / cryptocurrency guy on Wall Street. The most pro
Goldman Sachs.
Goldman Sachs. He's the new CEO. He's coming into power shortly. BlackRock, this announcement just came out, the world's biggest asset manager. Now, last year, Larry Fink says, oh, you know what cryptocurrency and Bitcoin's good for? Money laundering and drug dealers. Right? So again, if you look at what he's saying, you're going to sell your Bitcoin, right? You're going to say, oh, this is all BS. But guess what is happening now? They're going to launch an ETF. They're looking at an exchange-traded fund that will allow anybody with a brokerage firm to make it as easy as hitting a buy button to go out and buy Bitcoin. So you've got to look at this preponderance of evidence, right? All these people are already wealthy. All these people care about their reputation. If Bitcoin is such a trashy asset, why are all these people getting involved?
This is it's really interesting because this is kind of like, in a much more positive way on this side than what these people are doing. It's kind of like with Donald Trump. You don't listen to what he says, because he'll say some stuff that's like, what? Watch what he does. Because what he's doing is making sense. If you're a conservative, it's making sense. And it's moving orderly. But what he says sometimes is almost misdirection. That's what they're doing.
Misdirection.
Okay. Let's talk about Nextel and Apple.
Okay, so I want to talk about what has separated me in this marketplace. I think what has allowed me to show my readers such massive gains, and the reason why I don't just sell right away is because some of the experiences that I went through in the past. So between 1990 and 1991, I was a kid, and I had loaded up on tech stocks. I had a lot of Microsoft, a lot of Oracle, stuff like that. And I had a bunch of it personally. And then the whole market crashed. And my Oracle went down 85%, right? On a split adjusted basis, it went down to 12.5 cents a share. And I got scared out of a lot of it. And I sold a bunch of my Oracle and I sold a bunch of my Microsoft. And because it was a crash, just like we're in right now. I went back and I looked at the math, and by the end of the decade,
don't do that.
If I had held those positions, I would have been $20 million richer. Just on two stocks. On two stocks. Right? That was the magnitude of that move. And you would think I would have learned my lesson. In 2003, we had another crash. I sold my Nextel, which was a great company. Sold it at $2. Less than a year later, it gets bought out at 14. 2003, I'm super early on Apple Computer. I'm in at like a split adjusted basis of around $1.
Oh my God.
And owned it for a couple of years. I thought I was making a killing on this idea, sell it. And if I had held on to it, my clients, because of the amount that we owned, collectively, my clients would have made $49 million.
Oh my gosh.
Right. So these lessons are very real, Glenn. And so I have been through this cycle over 3 separate decades, and I've got a do-over now, right? 23 years later from 1990, I've got a do-over. And so my mission here is it's not only just to grow my wealth, but to help America grow their wealth too. I mean, the average American investor got blown up in 2003, got blown up in 2008, and their savings have just been absolutely demolished.
This is a chance for people
to rebuild.
To rebuild and rebuild in a dramatic, possibly generational sort of way.
Without risking
a lot of money.
A lot of money.
Okay, so I'll just encapsulate this. What you're saying is they've played their card. They've driven the market down. These kinds of early techs, we'll show you here in a minute, it's very volatile. But then at the bottom, they say, don't go in, it's going to crash, it's going to be worse. They all start buying. You're saying now is the time to get in.
Now is the time to buy.
Because they're coming. And once they come,
you will see this market absolutely explode to the upside.
So now let's go back to the 5 corrections. This is 1 year.
That's just last year. That's
Explain this.
So So I had recommended Bitcoin back here, and in 2017, we just saw this massive volatility. And you got to remember, if you don't see that, you see this big move down, and you're freaking out. So every time this happens, most people...
I mean, a 40% crash is scary.
That's what happened in July.
Right.
But I would say what separates me is that when we see these big these moves down, I get in front of a camera and I shoot a video, and I explain to my readers.
You don't hide.
What's going on. I don't hide under the counter, right? I let people know what's going on.
And here's the really important part here. If you buy at the low,
right,
at the next crash, you're still higher.
Yes.
If you buy here at the low, the next crash is here.
Yes.
You buy here. So if you're buying at the crash,
right,
even if you buy at the high, you're still higher than the last crash.
Right. So this is one of the reasons why I say that Bitcoin is not a bubble, because if you look since 2011, we've had 4 major moves from lows to high, from lows to high. And even if you bought at the high of each move, you have still made money.
Right.
And that can't happen in a bubble.
No.
That can't happen in a fraudulent asset class.
Okay, so the stock market is different. It crashed like this, 39% or 30%. But that was 10 years ago. We don't have those wild swings.
Right.
But early tech does. Can we go back to Amazon and show the difference here early on with the crashes?
Right. So here, this could be a cryptocurrency chart, right? I mean, this is from 94 to 54. Oh my good Lord. Right? I mean, that makes you want to throw up when you see that.
Right.
Right? You know, from 246 to 173, 402 to 297. This is just horrible volatility.
And no one, if I owned it at 402, knowing me, and it goes to 297, and I don't see it going back up, I just see this, I begin to panic.
Of course.
And I think we should sell some of it.
Right.
No one in their right mind today would say, sell Amazon.
Right, correct.
Right?
Yes.
They would say, oh my gosh, you've got Amazon stock, what'd you get in?
And so this is the special sauce of what we do, right? How emotionally the average person can't handle that. And so I recognize that, which is why I recommend small positions. Okay. Because if you're not risking life-changing money, then you have the ability to handle that kind of volatility.
Which is when when it was at $300, I didn't take my own advice, but I said to my audience, look, buy it, but a fancy dinner and a weekend,
right? Okay,
you're going to blow that money.
Yeah.
Just take that amount and put it into the market.
Yeah.
Most people think you can't do that now.
That's right. I had somebody ask me that question in Vancouver when I gave a speech. They said, oh, you can't get rich on $200 or $400. And I beg to differ. You absolutely can.
So just really quick, if you put $200 into Apple, today it'd be worth $59,000. $200 in Amazon it would be $111,000. Microsoft, $200 would be worth $164,000. That's an 82,000% increase, and none of them had a straight line up.
No.
Okay, but none of these things really had the ability at this point. We're still really young because of the space.
The space is incredibly young. So the whole cryptocurrency market is under $300 billion, right? So companies like Apple, that's about how much cash they have on their balance sheet, maybe a little bit less. So you only get the opportunity to make this kind of money from a small amount of money for a very limited period of time. The last time I saw a market that was small enough that you could do that in was the tech market from the early 90s, right? Because we didn't have a lot of hedge funds back then. We didn't have these massive pools of capital like we have now, and companies went public a lot earlier in their cycle, in their capital raise cycle. So you could get involved in a Microsoft when it only had a $400 million market cap. For Microsoft, a company like Microsoft comes to market today, it's already a multi-billion-dollar market cap.
Yeah. And it's not, you're not going to see those.
You won't see those same
big
gains.
Okay. Let's go ahead to, we're going to take some questions here in a second, but let's go to, I think your
big prediction?
Big predictions,
okay.
and your philosophy.
Okay.
Let's start with your philosophy of, that it's important to...
My position sizing.
Yes.
Yeah, okay. So what I say is, there's a couple of rules that I have for your position sizing. If you're a smaller player, $200 to $400 per idea. If you're a bigger player, you can put $500 to $1,000 per idea, and that you keep it uniform. It's really important that you keep it uniform, so you're not over-owning a loser or under-owning a winner. Now, another rule that you can use is commit no more than 5 to 10% of your liquid net worth. Let me repeat that. Liquid net worth. Don't put 5 to 10% of your whole net worth.
Yes.
Your liquid net worth. And again, don't say, okay, well, this idea looks really great. I'm going to just buy more of this one. The key is to use the same position size across your entire portfolio. And I just want to say, if you look at the way that Bitcoin has moved over the last few years, since 2011, if you had bought Bitcoin when it was down 71%, right, which was as far as Bitcoin was down during this latest run, if you did that in 2011, 2013, 2014, the last time Bitcoin was down this much, if you bought it when it was down 70%, you would have made 55 times your money. The time before that, you would have made 289 times your money. The time before that, you would have made 2,083 times your money. Now, there's no guarantee that's going to happen again, Glenn.
Right.
But the odds are in your favor when you buy in after such a steep sell-off as we've seen now.
What is custody?
Custody has to do with a big problem that institutions are facing about getting involved in crypto. In crypto, any company that is managing money for other people has to have the stocks that they buy held by somebody else, a custodian, so they don't run off with your money, right? So you have companies like State Street, which is the second largest custodian in the world. They hold over $2 trillion of other people's assets, and they're trusted to hold those assets. So we don't have a proper custody solution in the Bitcoin and cryptocurrency space yet. We had one that was just announced by Coinbase, but what we think is going to happen is that you will see some larger companies start offering custody. And when you have custody, then an insurance company or a money manager or a pension fund can actually start buying Bitcoin.
And how far away are we from that?
Oh, we're very close. Nomura Securities just announced, and they're a $100 billion operation out of Japan, just announced that they are launching a consortium, a custodian that'll be in place by the end of this year.
So that means the California Teachers Fund
could potentially
you put 1% of one of those things in.
Could buy Bitcoin.
And with the pension funds in the condition that they're in, it would be insane not to put 1%.
Right. So now I have to be very careful about saying this and not burning a source. So I was at a private event held at a castle in Tuscany about a week ago, and there were 65 people that were invited, and I was fortunate enough to be one of them. And I had a meeting there with a gentleman who used to run a $20 billion state pension fund, and he loves crypto. And I was talking to him. He left that fund, the state pension fund, and I was talking to him, and I said, how are state pension funds going to come into crypto? Because if you buy crypto and it goes down, you're going to lose your job, right? How do you do that? And he said, Tika, this is the reason why I left my job, to start up a whole new money management company. And so what they're going to do is use a vehicle called a fund of funds, and I'll explain what that is. So you set up a fund, institutions invest in that fund, and then that fund invests in other funds that invest in crypto. And that way, the institution has no direct exposure to the cryptocurrency. They're not holding the cryptocurrency. They don't have to worry if they're violating state rules. All they have is ownership of a fund which owns shares in other funds.
Give me an idea of the scope. Let's say BlackRock. If BlackRock, just themselves, them, they invest 5%.
I mean, that's bigger than the entire market cap right now of the entire space. I mean, they have $6 trillion, right? So it's over $300
so if everybody,
billion.
If these people just took 0.5% and invested,
we're going to have a multi-trillion-dollar market cap.
Okay. So then let's go to last chance.
Yeah.
Don't make this prediction because I'm going to hold you responsible and
as
show
you
it
should.
In,
as you should.
In January 1, you say Bitcoin, which is at how much today?
About 7,500.
7,500 will be
$40,000. We will see $40,000 Bitcoin by the end of the year. Do you want me to explain why?
Yeah, I was going to say because of this.
That's part of this. Yes.
And
there's a bigger reason. Since 2014, people have been trying to get an exchange-traded fund, an ETF, approved by the SEC, right? So an ETF is basically like a mutual fund. It goes out, it buys stocks. It's a way to own a basket of stocks just with one stock. So people have been trying to do that for Bitcoin because buying Bitcoin it's kind of a pain in the neck.
It's a hassle.
It's a hassle.
Buying Bitcoin because of Mark Andreessen is not as hard. Right. Some of the other ones, you just like, I don't know how to buy this.
Right, they're difficult to buy.
Right.
So what an ETF would do is it would make it as easy to buy and hold Bitcoin as going into your Fidelity account, hitting the buy button, and buying any normal stock. Right? So that would automatically open Bitcoin up to trillions of dollars of new investment. Now, since 2014, when people have been trying to do these ETFs, I've said it's never going to happen. Right? There's no way the SEC is going to approve it. You had the Winklevoss twins, the guy that made a lot of money in Facebook, had their Facebook idea ripped off. They've been trying to do it since 2014. I said there's no way the SEC is going to trust. In their eyes, I don't call them kids, but in their eyes, a couple of kids with a Bitcoin ETF. There's just no way. And so it didn't get approved.
Why?
Because they don't understand it. Two, they don't trust the Winklevoss guys. They don't know them. They're not Wall Street guys. And they don't think that they have the ability to protect the assets and protect the end users. Right.
So they want to make sure that this doesn't become a giant disaster
because they lose their jobs. Right. Everybody at the SEC will lose their job.
Yeah. Well, that's not the point.
Right.
Everybody in the country would lose their money. I wish they would.
Yeah. But they're not thinking that way.
They're not thinking that way.
They're thinking about their jobs.
Okay.
So then you had two more established players, Van Eck and SolidX, come and try and do an ETF. And I said, okay, this is more interesting. Maybe they have a shot. And then just recently, and this is why it's got me so excited about Bitcoin and why I have no problem with this $40,000 price target, is that the CBOE, the Chicago Board of Options Exchange, one of the most trusted, most important financial institutions in the United States. It's up there with SWIFT, it's up there with the NYSE, it's up there with the NASDAQ. Right, they do more derivatives trading there than anywhere else. They're the largest options trading clearinghouse in the world. They came in and they said, we will provide insurance for this ETF. And that is huge. So if it gets hacked, if there's fraud, if somebody loses the key, anything happens that could potentially impact the value of the cryptocurrency held, or the security of the cryptocurrency held there, they have insurance to cover it.
So now it's the big boys at the table. It's the adults.
It's the adults. They're not going to let the kids.
Yeah, I don't mean it that way.
Yeah, but this is the way they view it.
But that's the way they're thinking.
Listen, I have the highest respect for the Winklevoss twins. But this is the way that they view it. The CBOE and the SEC, they speak the same language.
Yes.
They're all the same people, right? They all know each other. They all go to the same places.
Right.
So the fact now that the CBO has put their stamp of approval on this, and I've never said this, unequivocally means that this ETF is going to get approved. Unequivocally. The earliest it could happen is August 16th. The latest it can happen is Q1 2019. Okay, so within this time frame, and I think we're going to get closer I don't think it's going to happen August 16th. I think it'll happen closer to the end of this year. But I think as people start realizing that this is actually going to happen, they're going to reprice Bitcoin.
Will that change the stability of it, or will it still be very volatile?
Bitcoin will still be wildly volatile.
Okay, all right.
It's going to continue to be volatile until it's a multi-trillion-dollar asset.
Okay. Give everybody something for free here. 3 predictions, or 3, I hate to use predictions, 3 things that you have analyzed that you say, these 3 cryptocurrencies you should invest in.
Okay. All right. Well, I can't give personalized investment advice. What I can do is tell you 3 ideas that I absolutely love. I can tell you a little bit about them, and I can tell you what I believe they will do in price. How about that?
Yeah.
That sound good?
Good enough.
Okay. All right. Well, the first is no surprise, is Bitcoin. I think Bitcoin will 5x from here. I think it'll go to at least $40,000, potentially $65,000 once we actually get the ETF launched. But there's more going on with Bitcoin than the ETF that I haven't told you about that I want to get into right now very quickly.
Sure.
So the narrative behind Bitcoin is what? It's slow.
Yep.
And it's expensive.
Yes.
Right? It's like the Stone Age of blockchain.
Yes.
So there are 2 things happening that are going to change that. One is called the Lightning Network, which is a protocol that will allow thousands of transactions per second to take place.
So if I go to a store, I go someplace, I now have to wait 10 minutes.
10 minutes, right.
But I won't have to wait the 10 minutes?
Not with the Lightning Network, no. And more importantly, it's taken the cost down to do a transaction from several dollars to a millionth of a penny. So free, essentially free. It's essentially free. Now, what happens is, and I saw this in the 90s, is that people look at a technology and they say, like the internet, and they say, well, you can't even download a picture. It takes 10 minutes to download a picture. How are you going to stream movies on that? You guys are crazy. You've got your head in the clouds. And technology is an iterative process. It continues to improve. And so what's happened with Bitcoin is that people have this old view of what it was rather than focusing on what it's going to be.
Can I give an example of this?
Yes.
When I left Fox, they laughed at me. They said, come on, you're not doing that internet thing. And I said, yeah, I am. They're like, that's crazy. Nobody watches TV on the internet. This is before, Netflix and HBO and me. We were the only ones that were doing this. And it was crazy. And when we first started talking to people, we said, I know there's a problem with buffering, etc., but soon everybody's going to be watching TV on that.
Right.
When's the last time you watched, NBC,
Broadcast
CBS?
TV? Nobody watches it
Nobody
anymore.
watches it anymore.
Yeah.
It's over. Okay,
Yeah.
it's still out there,
Yeah.
but it's now over. That's been 8 years. This right now is the same thing. People don't see over the horizon because we're so used. It's so big. Who's going to destroy the networks?
Right.
Well,
It
the
happened.
internet.
Right.
It happened. So it's the same kind of thing.
It is the same kind of thing. It's difficult for people to visualize a world different from the one that they are currently in. It's the same thing with smartphones. People couldn't understand how smartphones could be as transformative as they were. So the last piece on Bitcoin I want to talk about is something called RSK. And this is really important that no one is talking about. And this is kind of like the inside scoop here. RSK will allow developers to create what are called smart contracts. So a smart contract is a piece of code that can execute and actually do something, right? So it says, if Glenn does this, then Glenn will receive that, right? So it's an actual programming language that you can use and build real applications on. When you match that with the Lightning Network, so your transactions are virtually free and they're incredibly fast, what do you have? You have a whole new internet that you can build on, right? You have a whole new development platform that you can build on and have the entire security of the Bitcoin blockchain behind you.
So that's coming from Bitcoin.
This is coming from RSK, which is a development team called Rootstock. So that they're developing that now, and by the end of this year, RSK and Lightning Network are going to start to propagate across the network. Yeah. So here's to think about it. It's the functional equivalent of going from a dial-up modem to broadband in a year.
Wow.
Right? Think about what that did to the internet, how it completely changed the internet, how much value was created when you were able to do that. And so that's what's happening with the Bitcoin network.